Hey, it's Mike Hambright. Welcome back to the Flip Nerd VIP show. Today I have with me Sensei Gilliland, who is the founder of Black Belt Investors. And he's also previously one of the top-ranked martial artists in America. If you thought real estate investing took focus, try being one of the top martial artists in America. So before we get started with our interview today, he's got some great lessons to share with us. Let's take a moment to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days. Rates start as low as 9%. We'd also like to thank National Real Estate Insurance Group, the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. So, Sensei, welcome to the show.
Hey, Mike. Thank you for having me. It's a pleasure.
Yeah, I'm glad you're on. So I'm looking forward to talking to you. It's such a great story that you were obviously a black belt, very highly ranked martial artist, and now you're basically taking some of that focus and obviously applying it to your real estate investing business and teaching others how to do the same. So for those that aren't familiar with you, though, introduce yourself, tell us a little bit about you and kind of how you made that connection or that leap from martial arts to real estate investing.
Absolutely. I've been in martial arts basically my whole life, and at a very young age of 13, I was already teaching adult classes. At the age of 16, I was teaching the LA Sheriff's hand-to-hand combat and weapon disarmament, and I also was made the United States Olympic team, and for 92, however, we got cut out of the event. But nonetheless, I focused a lot of energy towards my training and just had an absolute passion for it. But then I found a new passion. That passion was income streams. I was really after income streams, and this was back in 1993, 1994. And I was searching around for coin-op car washes. And what ended up happening is that I didn't know anything about real estate. You know, I understood the business model of coin-op car washes, 24/7 business, cash business, very low maintenance, and it was appealing to me. But when it came to learning about the real estate, where the structure actually sits, do I rent, do I lease, do I build a suit, do I buy, how does this work? And so I found myself in a realm of unfamiliarity that I needed to learn everything I could about real estate. And here's what I ended up learning, Mike, that real estate controls all businesses. All businesses. And with that, that grabbed my attention, and I started sinking all of my efforts to learn everything I could about real estate. And 1995 was a breakthrough year. I got engaged. I got married. I moved in with my wife. We had a baby. We bought our first home. We did a cash-out refi on our home and bought my very first investment property over in Fort Myers, Florida, while living in Southern California. So I had a very busy year that year.
Yeah. And talk a little bit about, I presume in the martial arts business, because there is a business, you have a business associated with that, right? Do you have training centers?
I do. I've got several martial art facilities here in Southern California.
Yeah. And I assume in the martial arts business, other than having training centers and things like that, it's probably not a highly lucrative career. It's probably hard to make that a career, I would assume.
I think you're absolutely right. However, with me, that would be wrong. My career in the martial arts, let me straighten this out. I've just celebrated 25 years of my schools last year, so we're now hitting our 26th year. Most martial art facilities pop up and they're gone within a year's time. But I've got such a great following and a very low turnover rate, we've been able to sustain very well. However, my focus is not to make money in the martial arts. My focus is on the children, to give them a chance to do something in life. And I basically donate my time to teach these kids 6 days a week.
Okay. That's fantastic.
Yeah.
I have a son who's about to turn 7, by the way. He's actually a senior blue belt right now.
Fantastic.
So, yeah, he's about to turn 7, so he'll probably have he'll be entering the initial black belt stages probably before he gets to 9. So, yeah.
Right on.
So awesome. Well, so talk about, the interesting thing about real estate investing, especially for folks that are trying to get started or can't get started, is, there's unfortunately a very high failure rate. And a lot of it is the mental side of it and the lack of discipline, which I can't imagine a better transition out of martial arts into real estate because of the dedication and focus that it takes. So, talk a little bit about, you making that transition, and then some of the lessons that, you're able to share with people to help be successful in real estate investing.
Right. Well, you know what? I was like anybody else. Back in the early 90s, there was a couple gurus going around, offering their boot camps at the time. And I walked into a free workshop at a hotel and decided, hey, I love what I'm hearing. You can fix up a house, you buy it low, fix it up, and retail it, make a bunch of money. And everybody in the audience was excited. Right. However, let's be honest, the success rate of people in that audience is very low. And it's low because I believe they lack the education, they lack the drive, they lack the passion. And to be successful in any business, not just real estate, you have to want it so bad as like you want a breath of air.
Yeah.
And if you don't want it like a breath of air, then you don't want it bad enough. And more than likely, you're not going to find the success you're looking for. Mm-hmm. And so, an entrepreneur, we work 80 plus hours a week. We're burning the candle at both ends of the stick to eventually work 40 hours a week, right?
Right. Yeah.
But I find that most people don't really want to put out that time. They're more interested in doing their job and love the idea of becoming this real estate investor. But you know what? Dancing with the Stars is on, and I think I'm going to watch that instead.
That's easier.
It's much easier. So for me, that success is hanging right in front of my face. We're in the land of success. And it's so easy for us to grab it. However, we make it extremely difficult. And so for those investors out there, you've got to make a decision. Do you really want this as a career or as a portfolio? Or are you just going to make it as a hobby? Because hobbies are great, but they don't make any money.
Right. Right. So for folks that, I was talking to somebody else about this earlier, is that, and this was a specific person that, had decided he wanted to go to a real estate training course, and the same day that they signed up for it, he went back to work and found out that he lost his job. And,
oh, no.
There's so many people that I know that are successful real estate investors, and some of, a good portion of them were backed into a corner of some sort where
Sure.
This is it. This is going to work. Failure's not an option. And what do you say to folks that, there's also, I think a lot of the training boot camps and things like that kind of always make this sound a little bit easier than it really is.
No doubt.
Right? And so how do you kind of recondition somebody's mind to say that you think this is easy, but it's not? And are you really willing to do what it takes? How do you convince people to get out of their comfort zone and really get after this if that's what they want?
Yeah, I cannot convince them verbally. Listen, I'm a martial artist. I've done martial arts my whole life. I've been grappling, I've been boxing, you name it. I've done it. And you can talk to me about it all day long, and it'll sound really cool, and I'll start picturing in my head that I'm Bruce Lee. But step into the ring, and that's a different challenge. So I've always promoted through my educational courses that this is not easy, but I can simplify the process. Mm-hmm. And I will be in your corner to help you. Now, I will hold your hand for a few minutes, tell you exactly what you do, and push you right back in that middle of the ring and yell at you to get it going and continue in that fight. You do well, you don't do well, you come back in the corner, and I readjust and get you back in that ring, because failure is not an option. Mm-hmm. Now, you can read all the books you want, you can listen to all the 8 tracks you want, you can listen to CDs and DVDs and all that other good stuff. However, what are you doing with that knowledge? Because we're all knowledgeable. Now, wisdom is taking knowledge and putting into action. So if you're an investor, let me just say, Mike, You come to me, and I'm going to train you in a martial arts because you want self-defense. So I can give you books and tapes and CDs and all that great stuff. And you're all pumped up, and that, eventually that sizzle is going to go to fizzle. Or I take someone that's exactly matched to you as the tail of the tape, and I say, Mike, you take 5 years to study this, but I'm going to take this guy over here just like you. I'm going to clone you. I'm going to give him 5 weeks in my gym. We're going to be hands-on. I'm going to have him hit the bags. I'm going to have him hit, the speed bag. I'm going to have him throw some kicks. I'm going to put him in the inside the ring and let him spar. You tell me, who's going to be the better at self-defense? The guy that was training for 5 weeks, or you that's doing books and tapes for the last 5 years?
Right.
There's going to be a huge difference there. And that's how we approach our education, that it's very hands-on, lots of role-playing. So for those investors out there that are deciding or trying to decide whether this is for me or not, sitting in a classroom-style setting is very, very important. Just like a doctor. They go through college, they go through medical sitting in a classroom style. However, eventually they're going to start cutting into a cadaver. They're going to shadow another doctor as a resident or an intern and eventually break off on their own doing their own practice. And that's the way we must also approach real estate. Classroom education, start getting some coaching, shadowing those that are successful in your niche field, which is very important, by the way, and then eventually breaking out on your own and always having someone in your corner to go back to ask for advice.
Yeah, yeah. What do you advise folks on in terms of getting started? I think one of the problems that a lot of folks have is that there are so many shiny objects out there. There's so many ways to make money in real estate investing.
No doubt.
And it's so true. I mean, I would say a lot of folks look at me and they see some level of success that they would like to that they identify with, and then they'll ask me questions about stuff that they think I know, multifamily,
right,
commercial,
right.
And I know nothing. I'm like an infant in that area. I mean,
right.
I could figure it out if I had to, but I've just chosen to stay very focused on single family homes, right or wrong. But they're very different businesses, and I think people kind of get paralyzed by thinking, well, I'm going to go do these, I'm going to make money these 20 ways to start. And so
Sure.
What do you advise folks on?
Well, here's what I'm going to do, the advice that I'm going to throw out. Everybody listening, you decide, do you need a paycheck or do you need a portfolio? And that will start leading in the right direction, because if you need a paycheck, then you've got to start buying and selling real estate, whether it's through wholesaling, assignment of contracts, rehabbing, purchase options. You got to do something to start generating some immediate income. However, if you're cash rich but portfolio poor, then you may just want to start looking at building that portfolio. Now, I'm also a single family type of guy, 1 to 4 units. I do dabble in multi-units and other things, but my focus is single family. And I think a lot of people do break focus because they are presented with many shiny lures, as you said. I mean, think about it. Who's been to Vegas? Well, probably most of us have been to Vegas, and if you're not raising your hand, you're probably lying and you want to keep it in Vegas, right? Yeah. So when we go to Vegas, we're doing a whole lot of stuff, and one of the things that I like to do is stand in the buffet lines, right? So do they give you a small plate or do they give you a big plate? They give you a big plate, right? So then everything looks good. Oh, I'm going to take a little bit of this. I'm going to take a little bit of that. I'm going to take a little bit of this. The next thing you know, you've got this mountain of food on your plate, and you sit down and you start tasting it, but when, a couple minutes into it, all those flavors start meshing together and it just becomes a bunch of junk and you throw it away. And that's what I see with a lot of real estate investors out there doing. They're taking this boot camp, they're taking the rehabbing, they're taking the commercial, they're taking the mobile homes, the creative financing boot camps, and they become a jack of all trades and a master of none. Mm-hmm. And so to me, that's where they feel like, oh, I'm just frustrated, I'm not sure where to go, I'm not making any money, but I just spent $60 million in boot camps.
Right.
That becomes a waste. Another analogy would be someone like you coming to me, Mike, and saying, hey, you know what, Sensei, I'd really love to learn boxing, jiu-jitsu, judo, karate, Muay Thai, and again, you're going to be a jack of all trades. And Mike, if you were to get stuck in an elevator with a grappler and you're in a confrontation, you're going to lose because that grappler only focuses on wrestling and he's great in close quarters. However, if you're out in the street and you're going against someone that's in Taekwondo, well, he's great with distance and you're going to lose. Why? Because you have not mastered a niche. And that niche has got to be what's important to you. Do you need a paycheck or do you need a portfolio? And whatever that niche is, then you master it and you build upon that niche. And once you become a black belt in that niche, then it's okay to spoke out from your hub and maybe go with a different direction that complements your original niche.
Right, right.
Does that make sense?
That's great, yeah. So there's some folks that talk a little bit more about whether folks want a paycheck or they want a cash flow or truly kind of be more passive, if you will. There's a lot of real estate investors that get started and they aspire to keep more rental properties, to build wealth, if you will. And the challenge is once they get started in real estate investing, unless they have some other way to feed their family and pay for their marketing, because one of the things that a lot of the training classes never teach you is it costs money to run a real estate business.
Yes.
You have to generate leads. You probably need some administrative help at some point. And if you don't do those things, then you're just creating a job for yourself and not a business. But there's this period where you would like to keep houses as rentals, possibly, but you can't because you can't afford to. You have to sell them and ring the register now. So talk a little bit about, how you advise folks that, aspire to keep rental properties, but they have to kind of earn that paycheck first and then maybe start to tuck some away.
Absolutely. And maybe you've already got a great cash machine developed and you just need to park some money somewhere, but don't take that illusion that investment properties don't require feeding of money every once in a while. You're going to go through a vacancy. You're going to pay a deductible. You're going to have repairs. You will have to feed that. And unfortunately, back in the middle of the 2000s, everybody was building wealth and not income streams. And I always promoted income streams, not wealth. And so they would run out and they'd buy these investment properties where they're making a small cash flow or not. And then the next thing happens is a recession, and they built their portfolio on sand and it sunk. And there was a few of us that actually really survived, and that's because we knew how to generate income to be able to feed our investment properties. And so for me, what's important for investors, again, is going back to, okay, we know what the end goal is, and the end goal is to build a financial security for me and my family. And through that is going to have passive income and appreciating assets. But how do I get that portfolio of appreciating and cash flow assets? Well, you got to develop these income streams. And so in real estate, you can start off not the easy way, but it's not the most difficult way, and that's becoming a wholesaler. And wholesaling to me is the foundation of all real estate, because if you're a rehabber, you're a wholesaler. You got to buy at wholesale prices to sell at a retail price.
Right.
And if you're a landlord like me, I don't pay retail, and I hope you don't pay retail, Mike. I pay wholesale because I want that built-in equity position and have a better return on my investment. And so if I'm focusing on my wholesale side, I can assign contracts and have immediate income. I can pick and choose certain properties that I want to buy, fix, and flip, and my flipping of contracts may be able to pay all cash for these rehab projects. And now I've got two income streams, and then I've got purchase options, which is another form of wholesaling, but I actually call it a yin-yang of wholesaling, because wholesale is all about equity positions. And oh, you like that. I see you're writing it down.
I'm writing a note.
And purchase options, where we're looking at lease options subject to financing. Properties that lack a little bit of equity, maybe have no equity or upside down, I can still put those properties under contract and flip them out, generating an immediate income just like I do in wholesaling. So now I've developed 3 different types of income streams within my hub of wholesaling.
Right.
And with that money, then, okay, maybe we flip. Oh, let's buy and hold this one.
Yep.
And let's flip. Look at this situation. Now I can actually come in and get some sort of creative financing or owner financing, and I'm building my portfolio slowly, but I'm still ringing my cash register.
Yep.
And so one of my oldest domains is cashandwealth.com. I don't have wealth first. I have cash first. So to me, that's extremely important.
Yeah, yeah. And that's interesting coming from a California guy. I mean, so I'd like to get I'd like to actually talk to you about operating in other markets, because I know you do. But before we get to that, could you just, for folks that are out there, could you talk a little bit about some of the hybrid strategies of purchase options, lease options, how you kind of basically, I think what you're doing is you're finding essentially a lower equity deal or a deal that you can't buy otherwise and finding a way to still monetize it. Is Is that fair?
Absolutely. Yeah, it is. My primary strategy is always to wholesale,
Yeah.
meaning to flip the contract. And then I'll take a look at possibly buying the property to fix and flip. But if it doesn't have that equity position, I can't create the equity position, then I've got to look at other strategies. And that may be subject to the existing financing. That may be a lease option. That may be a sandwich lease or a sandwich subject to, or some sort of owner financing. And here we have a situation, let's say, for an example, quick example. Let's say we got a property that's valued at $300,000. But the owner of that property is distressed and wants to sell, but they can't sell because they have a loan balance of $290,000. So we've got an equity position of $10,000, don't we? Right. But come to find out, they're actually $20,000 behind in payments. So now they're upside down on their property by $10,000 with a total owed of $310,000. Well, you know what I'm going to do with that, Mike? I'm going to take that property, I'm going to put it under contract, and I'm going to go sell it to a homeowner for $325,000. Now, a lot of people are going to think, why would anybody buy an upside down property? Why? Well, typically because, number one, the financing is going to remain in place and that new buyer can step right in and start making payments directly to the bank. Two, we've got a lot of people out there that still want that American dream of buying a home. And most of our home purchases are done today using an average of 10% down. Well, if they're already targeting a $300,000 house, 10% of $300,000 is 30 grand. I actually just saved them $5,000 because all they have to do is come up with 25,000 bucks. So 20,000 will go and pay off the back payments and put the loan back in good standing, and 15,000 is going to go where? Right in my pocket or right in your pocket. And that way they can actually keep their income to debt ratio in check. And there's many, many people out there that are cash rich but credit poor and cannot go get a mortgage on new properties.
Yeah.
So we've got a very large, broad-based clientele of distressed owners and frustrated buyers that can't acquire the loan. So it's a perfect match.
Right, right. Awesome. Well, in terms of, let's talk a little bit about investing in other markets. One of the great things that I've gotten out of this show is I've always been very kind of myopic and focused on my market, and always kind of freaked out about investing in other markets if my money's on the line, or money that I'm responsible for. And so I've met just a ton of folks like you that are investing in multiple markets, and it's just fascinating for me. But talk a little bit about kind of why you do that, and then a little bit about kind of how you do that, really more operationally. Well, share some insights on that.
Absolutely. You know, why I do it? Well, I started out of state because I couldn't afford to buy in California. You know, if I'm going to go buy something outside of the border, it's going to be a fraction of the cost over here. So I can go over to Arizona and buy a newer house that was built in the last 10 years for $125,000, but a house like that over here is going to come with wheels. Yeah. So there's a big difference here, and I couldn't afford it, and I was 25 years old, so I had to go where it was affordable for me. And that was, at that time, Fort Myers, Florida. So I find a lot of Californians in the same position. You know, they've got some money, a little bit of money, maybe a lot of money. However, they find out that for the price what they can purchase over here, and over here would be on average of $350,000 in not even the best of neighborhoods, they can go buy multiple properties outside of California. Now that $350,000 purchase here in California using the 1% rule, basically stating that 1% of $350,000 I should be bringing in at least $3,500 a month in rents, is not going to happen here.
Right.
Okay, that $350,000 property is going to bring in maybe $2,000, $2,200 a month in rents, so you're not getting the best returns, right?
Right, right.
However, we can step out of state, let's say for instance Cleveland, and I can be in the same type of neighborhood, it's a strong working class neighborhood, buy a turnkey property in an emerging market for 50 grand, and I'm going to pull in $1,000 a month in rents. That makes a better return on investment, obviously.
Yep.
Now, those investors that, like yourself, that love to invest in your own backyard, you can do that. You're in Dallas-Fort Worth. I'm very familiar with the area. I've wholesaled in that area several years ago. Yep. Love it. It's a great market. But for Californians, that's very difficult. Sure. Not only that, I'm also into diversification. Every market is different. So when the recession hit, I have properties scattered all over the states, and every market responded differently. So in your primary markets, which are going to be the 5 diamond states of California, Arizona, Nevada, Texas, and Florida, those were hit the hardest, but they also bounced back the best. So those are great areas to buy for appreciation. However, the other markets, such as Indianapolis and Kansas City, Missouri, for an example, didn't get hit that hard. They didn't lose as much. So it created balance into my portfolio, and balance is very, very important to me.
Yeah.
Now, the other thing is this, Mike. People invest in 401ks. People invest in mutual funds. They invest in stocks. Is that in their own hometown?
Right.
No, it's not. Do they ever get to go visit that stock or that company? Absolutely not. Do they get to sit down at the round table with the CEOs and chairmen to discuss their stock? Absolutely not. So how come it's okay to invest in the stock market where you cannot see, touch, feel, taste that stock, but people are scared to invest in real estate where they can actually go drive by if they wanted to see how tall the grass is?
Right.
Or go fly to it. It's a tangible aspect.
Yeah, and I think some of the challenge is more of managing a contractor remotely, having a property manager in different markets that may or may not be reliable. So those are some of the more of the operational things.
You're right.
Of can you trust the boots on the, because you're always going to have boots on the ground there. You know?
You're right.
So,
You're right.
Yeah.
And the boots on the ground primarily is going to be your property management company. I don't suggest, I'm a property manager. I don't suggest anybody being a property manager unless you know that state law, especially if you're going to be owning remotely. So your property manager can either be your best friend or worst enemy.
Right.
So it's very, very important that you get hooked up with a property management company that has been there, done that through the thick and thin of everything. And if you're out there searching for a property management company, one of the easiest strategies that we do if we're not on the grounds yet, but before we get on the grounds, is we'll simply call the large players in the area, the realty companies, maybe a Century 21 or Remax, the guys that have been around for a while, and ask for referrals. And if they're all pointing in the same direction, then I've got a good clue of who I'm probably going to be using for property management. Then I will actually go out there and interview them. I won't do it over the phone. I'll do it in person. And so I'll interview them, and if I get a good gut feeling, then I'm signing up with them. Yeah. But, you know, you don't want to be a completely passive investor. You're not that guy on TV doing Ronco where you put a chicken in the oven and set it and forget about it. Okay? You do have to check on your assets and optimize your portfolio every few months.
Right, right. Awesome. Well, you've got a lot of great information. I appreciate you sharing it today. For folks that want to learn more about Black Belt Investors and more about you, where should they go?
Well, you can visit one of my websites, and that is blackbeltinvestors, plural.com, blackbeltinvestors.com, where they can simply give us a call here at 951-280-1900. Again, that's 951-280-1900. We'd be more than happy to help you out. We're open Monday through Friday.
Great, and we'll add links for links in the phone number down below the video here as well. So, well, Sensei, thanks so much for sharing your insights. It was a pleasure talking to you today. I look forward to talking to you again soon.
Well, I appreciate you having me on the show. It was a fun day.
All right, take care.
Thank you.
Bye-bye. Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry, so get on over to FlipNerd.com.